To formally come to order.
We don't have Barry yet.
We have a quorum. We have Gary and Robin.
Okay.
Because this is,
Okay.
we can wait for Barry on the other stuff, but we can get this out of the way, right? If we have a quorum?
I think
Or
so.
you want to just wait till we
Yes.
come in? Okay.
Yeah.
All right. So Robin,
Okay.
you want
So,
to?
yep. I will call the Finance and Audit Committee meeting to order and read the statement of announcement. A news release announcing the date and time and place of February 5th, 2020 Finance and Audit Committee meeting was distributed February 3rd, 2020 to appropriate media and other groups or individuals who have requested notification. The announcement and agenda were posted at the Department of Disabilities and Special Needs Central Office and on the website. So I will make a call for a vote to adopt the agenda. Gary, let's see.
Aye.
Are you in favor of adopting the agenda? Okay. And I'll, I guess, second it. So it'll be adopted. Okay. So the first item, or the next item, is reviewing the minutes from January 9th, 2020 meeting. Can I get a approval of the minutes of the meeting?
So made.
Okay.
With thanks
Great.
to Sandra and Chris for developing that system.
Yeah, absolutely. Okay. So the minutes are approved. The fourth item on our agenda is review of recommended audit directive revisions and enhancements. So I will let staff go over that or start, with that item.
I'm going to just say something. Sandra, can you text me Barry's phone number and I'll go ahead and call him and just put him on speaker?
Okay, sure will. Yeah, because I told his
Right.
assistant just to call that number if need be, but I'll send it to you.
Okay, thank you.
All right, thank you.
Do you want to move on or wait for him to join us?
I say we keep going.
Okay. All right. So I did send out the proposed audit directive, and my understanding of how things are working right now with us until the policy committee and the new commission discusses how things go, that we needed to bring to you a directive draft that we would like y'all to look at, get you to review it for any content or concerns you have, and then from your comments, go back to the drawing board and come up with one that we want to release for public comment. Once those public comments have been received, we will then consider all those comments into a final vision that will be brought back before you all for actual approval. Do I have that process correct?
Mary, do you know? Or Gary, I don't know exactly if that's the process or not.
Hold on. Let's do it again.
I just want to make sure that, my understanding is y'all aren't approving this today. You're kind of got a draft of it. You're going to be asked to look at it and give your feedback. And then based on your feedback, if we need to make further modifications, we will, at which point we'll give the general public an opportunity to comment on it, which has never been done before.
Yeah, my question is, we've never put this directive, since it's a commission directive, we've never put it out for public comment.
Yeah.
Well, and that it does not affect its service delivery.
That's right. It's not touching services at all.
So it's
Yeah.
not increasing or decreasing any type of services. It's really an administrative function that the boards and the QPLs have to do by contract.
Yeah, I'm not sure where the idea that it goes at the public comment comes from.
I think that,
In abundance.
no, I think that because Chris is new, or because people have always said everything goes out for comment, but this is not a service this is not a directive that deals with the individual services. So, and it's the decision of the commission as to what they want to see in these audits from their providers. So I would think that is and it's never gone out before. So there's no precedent to send this out for public comment.
Yeah, that's what I'm saying. I don't, when we're dealing with these kind of things, I can't think
Where
of
it
another
came from.
time
Well, it's a
that
literal
that
meaning.
Okay.
that on this sort of situation as opposed to some other situations that we've been dealing
Mm-hmm.
with.
Yeah.
Now, I think what we're talking about there's more formal comment. It's always been the, for lack of a better word, kitchen cabinet. What are you hearing from the provider community in response to that? Have we gotten some feedback on this area at all? That question is typically raised because it's part of the considerations that we have. But as far as a formal public comment period, I can't think of one that we've done in my time on something like this.
Mm-hmm.
Right. I mean, I've been here now 12 years, back here for 12 years. And we look at this directive every year, and it's never been issued for public comment.
But I do know that after the fact, that after it's been issued, one certain auditor would write numerous comments about this audit directive. And that would be the person in this room who wrote the revision.
Well, and again, that's the sort of feedback that we typically did get from the community that we like to take into account. I mean,
Yeah, but it was after the fact. It was after this came out, like, why aren't they asking for this, or why are they asking for that? So, and I don't recall, my auditor never responded to it. Only one auditor that I know of responded to it, I think.
Well, I think, Gary, to answer your question, I think it's a literal interpretation of how directives are to be handled. And I don't know that there's an exception within the directive on directives or the policy on directives. And I think that's where that originated, just to ensure that we were checking all the proper boxes. And if the committee is fine with handling it as we have in the past, then I'm certainly okay with that. And I know Kevin's done it that way historically.
Will
I
this
can
need
only-
to be, okay, go ahead.
Go ahead, Robin. I apologize.
Well, it's okay. I just was wondering if this would be something we have to take to the commission, to carry over to the commission, and something we'll have to vote on there, or just
Yeah.
just
Yes.
You would have to,
Okay.
you would have to take
Okay.
comments, your suggestions, and then it has to go to the commission, yes.
okay, just curious. Okay.
And
Gary,
the
go
question,
ahead. Yes.
and I think the question has always been before it gets to or the question at least we're dealing with now is before it gets to the commission for a vote, does it have to be opened up for public comment?
Right.
I think traditionally we have not. At the same time, if there is something out there that says we should be doing it differently, I'm operating in ignorance of that. So it just because we've always done something some ways doesn't necessarily mean that we're doing
Yeah.
it right.
Well,
Yep.
And
And
so I think maybe
Barry,
just
it's
need
your name.
some investigation. Hey Barry, how are you doing? Maybe we just need
Good.
some clarification on that to make sure that we're doing things properly.
well, to be perfectly honest, we started reviewing some of the policies this morning to get ready for Barry and the policy commission, to give them kind of a list of what's in the queue, what do we need to look at. And also we started reading all the directives that deal with how you deal with policies. And to be frank, there's serious lack of consistency in our own directive, because most of them were written on the fly, Gary, if you want to know the truth. It was kind of just, it wasn't.
Oh, I totally believe it. Yeah.
Yeah. And so what we're finding is that one will say something and the other one will step on that one on part of it, and another, I think there was like 3 directives we found that were that conflicted with one another quite seriously. So those are the ones we're probably going to be bringing to Barry and the committee first, to get a nice, clear path as to how do we operate with all policies. And it would be up to the commission to decide if there are certain policies that are commission policies and that you don't want public comment on, then let's get them in that basket. So, and if you want everything to go through, then let's say that, because right now it doesn't. So there really, if Chris was reading a policy, something on policies, there might be 2 other things out there that conflict with that. That's what we located this morning. So that there, I think that if you're going to err on the side of caution, put it out there for public comment. What the heck?
Yeah, we've got time.
We've got a little bit of
It's-
time.
it's
Let's
not
just
a-
do
It's
it.
not an urgent
Yeah.
situation.
That was
Okay.
part of it. We were trying to do the training.
I can still do that.
If it's not a time sensitive matter, I'm fine.
I don't
with that.
think we
Like,
should dilly dally with it too long, but I think we should put it out for, my opinion is we put it out for public comment, and then you go, and that way you get more time to really look at the draft, and we can put in the public comments and answer those comments if we get any, now that we have the main commenter working for us. And then we'll go ahead and you just never know. But we'll make sure we send it to the audit firms. I think that's probably a good place to make sure they get it. They might not be looking on our website, but, and at that point, we'll just bring it up at the next audit for a final review. How's that?
I think the worst case scenario under that is we've gone beyond what we are required to do.
Yeah.
So I have no problem with that personally.
Apparently, we're allowed to tie ourselves up in knots, so it's okay. We'll just do that, and then then that way you'll have it in the March meeting.
Correct.
You'll have it in the finance committee meeting, so it can be approved in the March board meeting, commission meeting, and that's time. We're good. We're good on time, as long as it's done then. Okay?
Okay, so I should make a motion.
It should have been April or May, I think, historically.
I think we try to get them out in March or April because some of they're doing some preliminary
Right,
work in
planning and
May.
stuff. Right.
Well, what we'll try to
Okay.
do is we'll get it out the door right after the commission meeting.
Yeah.
Mhm.
Okay.
So even if we change it about the,
Well, if that's been decided, are you ready to discuss the directive itself and the proposed revisions and enhancements?
Yeah, yes, I'm
Yes.
good with that.
So, all right, so basically, the overarching premise behind the suggested changes is that we're having a lot of audit quality concerns. One thing I will state is that DDSN is very, very complicated, and if you don't spend a lot of time in the DSN industry and you dabble in it and only do a few audits here and there, we can tell in the quality of what we're getting, and we rely on that heavily for lots of analysis in our own Medicaid cost reporting process. So the other issue we're having is if you read any audit report, it states that it's management's financial statements and the auditor's been hired to issue an opinion on those. We have a real weakness in our staff statewide as well in the finance function where they don't really understand a lot of things either. So what we're trying to do is attack this from both sides. We're trying to beef up the audit directive and make it more accountable. And then also we're trying to establish better trainings, which under item 7, under my CFO report, I'm going to talk about this more specifically, but we're developing training programs for actual DSN board finance folks. So we are trying to look at the directive as an auditor control and then a finance director training for them to really understand what we're looking for. Also, an overarching theme here is that the way this directive has been written historically, there are a lot of things baked into the audit engagement itself. We've got 2 engagements that we ask folks to get into. One is the actual audit report itself, and the secondary is agreed upon procedures, which it is an audit level service with attestation rules attached to it, but it's not, you don't issue a financial statement, and there's no materiality in it. So if they find something, regardless of what size it is, they're required to report it to us. So the issue I think we're having, and I saw this firsthand when I was out in the real world, is auditors will tell Kevin, and they put a statement in the audit report that goes to him that says they've read this audit guide and they're following it. And I know firsthand there's a lot of firms that don't. And so the reason is, just to give you a couple examples, the cost allocation work, the procurement code, the procurement testing, the key staff testing. There's a variety of different procedures that were expected, but I know that auditors weren't always doing what they were supposed to do. Some of it had to do with lack of clarity on what exactly you were asking for, and you had to kind of figure it out yourself or call internal audit and asked them, which a lot of auditors may not have taken that liberty to do that. So by taking these procedures and moving them into the AUP, or the agreed upon procedures engagement, we have positive affirmation with results and findings on every single thing that we ask them to do, versus them just deciding not to do it, and we have no way to know whether auditors are doing what they're supposed to or not. Because with the audit report, all you get in there is that we followed the audit guide, and that's all you get, with no details. So that's the overarching reason why a lot of this is being done. Also, our cost reports, the fact that our financial schedules in the back of the audit, there's a attachment A that I've not sent to you yet, where we're getting information so high level that we can't effectively complete our jobs. And it's also resulting in some inaccurate cost report data that we're getting. So we're trying to beef up the schedules as far as the detail needed, plus to bring it in line with some of the new standards that are coming for reporting. The other thing is we are adding some additional work because internal audit has been tasked with getting out of the providers more and into our own DDSN issues. So Kevin's team is more internally focused going forward, or that's their goal. So we're going to have to rely more heavily on the external auditors, to do what they've been asked to do. So there's only a few extra things actually added. A lot of this content is just clarification, and putting more definitive expectations and reporting obligations in the directive. Also to give more background information and resources right in the directive versus having to figure out, for example, the minimum wage test just said that you had to verify all minimum wage. Direct care were paid the minimum wage. Well, we actually put right in the document the rules there related to the $13 per hour, as well as some of the other procedures we need to make sure providers implemented that properly. Since we've added some of the additional work, two things kind of, one more thing. Audit quality also sacrifices due to the tight deadline we have. We have a 90-day existing deadline on audit reports. So if you have a June 30 year end, typically it takes a month to close your books out to get them audit quality. So the auditor's not starting until August, and then they're doing all their audits in August, and then in September or mid-September they switch to writing the reports. And what that ends up doing, and because of all that compression, they end up cutting corners, because they got to meet the deadline or face a penalty. And so I wanted to extend the deadline to October 31st. That will help our audit quality as well. It will also allow us to continue to meet our obligations in-house as far as our own reporting needs. Also, I added the Yellow Book, the government auditing standards, to this. Previously, it just had generally accepted auditing standards. There's a vast difference between those two audit standards. I think it's implied that you should follow Yellow Book or government auditing standards in an existing directive, but it was not clear. And the reason we want that is we want auditors that are experts in doing nonprofit and government auditing. We don't want people that they do car dealerships all over the place and they do one government audit and it's ours. So by making it a Yellow Book engagement, they have to meet certain professional criteria and training requirements to meet those standards. Let's see. That's what I have. Also, we have a cost settlement process. That providers need to spend 90% of capitated money, 95% of non-capitated, and then special grants, they have to spend 100% or send it back. The problem we're having is that people are not consistently reporting these revenues, and the expenses are also hard to identify when we're trying to tease out how they spend our money. And so I'm adding a schedule that will actually make them account for and identify where these grants are accounted for and the expenses, so that we can more readily do our settlement process. That's one of the reasons we're behind on our cost settlements. final big thing is our room and board policy. Right now, the way it's written, which I want to look at it as well, it states that the room and board calculation must be turned in to our cost analysis division, and they have to cross-reference it back to the audit. Problem with the audit report is that it's not granular enough to ensure proper completion of the room and board calculation. So an example of this would be telephone. We have a line called telephone, which could have internet, cell phone, landlines, cable TV, all kinds of stuff in there. We have an insurance property line, which will have vehicle insurance, building insurance, forklifts, all kinds of things that aren't room and board. And so being on the audit side, I know this is not a big ask, but what we're going to do is make the auditors complete a schedule where they've used the trial balance of the audit client to generate a room and board calculation for us, that's basically going to eliminate the need. There is still going to have to be a review, but really reduce our need for our room and board review in the cost analysis division and allow us to do it much more accurately. So that's the main gist of all this. The clean copy that was sent out later today, a little bit earlier today, late in the day, is an easier one to read. You've got the other one that's got all the marked up sections in it, and I'll be glad to field any questions y'all have, but I wanted to give you kind of a broad overview of why we've made so many changes, and a lot of the changes are formatting and clarification versus new stuff per se.
Chris, I appreciate the explanation and is somebody trying to talk? Because I just got a lot of feedback.
No?
We might have moved papers or something. It'll give
Okay. Or maybe it's, is it my echo?
He's bigger.
Well, well, Robin's trying to fix what she's fixing. Couple.
Well, okay, go ahead. Well, I can hear y'all, although I keep hearing feedback. So it must be like my echo, maybe.
Sometimes if you use a cell phone, you get it.
Okay.
Yeah, it feels like it's on your end, Robin.
Okay.
My perspective.
This is Barry. Can anybody hear me?
Yes. Good.
Okay, good. I can hear y'all perfectly fine, but I got to do something about this microphone or something on my computer.
Okay.
I'm on my phone now.
All right. That works.
Gary, what were you going to say?
Okay, so a couple of quick questions if we can get Chris to quit locking, the video on somebody.
Sorry.
That's fine. So the last element you were talking about, the room and board calculations, Chris, that was the stuff that we dealt with a few years back that was such a cluster. Is that correct? And the new formula? I just want to make sure I'm following what you were talking about with regard to the room and board calculations.
Yes, sir. So the room and board is a annual review that we have to do for each provider, even the QPLs. The issue we have is that the only documents we have here to validate their calculation correctly is an audit report that does not give us sufficient line item detail of broader categories that are built in the audit report schedule. So for example, if I turn in my calculation and I put all the telephone in there, it ties to the audit, so check mark, we're good. But when I delve down into what the auditors put into that telephone line, there are things in there that aren't room and board.
Right.
And so using the audit doesn't work. And so by having the auditors and the providers, sorry, I'm in client world still, the providers take ownership of that and use their trial balance, which is the actual underlying accounts that make up that telephone line, we can get a much more refined and accurate calculation.
I got that. My question was more, I want to make sure that I'm thinking of the right thing. But what we're talking about here is the room and board calculations that several years back we had an enormous kerfuffle about that ended up with big payments and things like that back to folks,
Well,
right?
The issue ended up with the HUD homes and how
Right.
housing assistance was considered.
Right.
It's tied to this, but it's not precisely what we're addressing here. The secondary part of this is the room and board policy and our review of actual implementation of the caps. You've got two issues here. You've got a computation of a rate, which is all we review right now. My concern is we need to be looking at their policies and how they actually implement the rate, because that's where the issues come up, is if they don't apply it properly.
Hey,
Yeah, so my thought, yeah,
Oh.
go ahead.
no, this is Kevin, sorry. So yes, that issue that we had a few years ago targeted HUD homes, which was a percentage of this. What Chris is going to talking about is every residential provider out there.
Right.
And by adding this schedule, I think, and correct me if I'm wrong, what he's trying to say is the way we were requiring it sometimes had the potential to possibly artificially inflate the room and board for the consumer.
Which
So there
was
were
the problem that we had at that point in time as well, when we were going through this. So if I'm understanding you correctly, by implementing this, we will decrease the likelihood of having a repeat of that for homes outside the HUD homes.
Correct.
Absolutely.
Got it. Okay. That was question one. Second question that I had is availability of CPAs, accounting firms to provide the service. I'm not really concerned about the major ones, but I want to make sure that we're not putting a situation where somebody in Chester or Jasper or one of the smaller counties, Barnwell, they just don't have access to anyone. So how is this going to affect the actual, in terms of accessibility to people who are capable of handling it under the new system?
I was going to say it shouldn't affect them at all because they're required to have the audit now.
And people travel to them.
Right. And I was going to say some of the rural ones you may have Bamberg that has a firm that comes out of Orangeburg. So they get to them now. It's just changing, again, some of the methodology. But the requirement's already been there. And they have not had any problem complying with it.
I think your overarching question, Gary, is one that we need to keep in mind, which is we don't want to create a barrier to entry for
Right.
auditors, so that we're not stuck with the same firms auditing all the providers all the time. We're going to implement a mandatory auditor training, which will allow these folks to come in and get some firsthand knowledge on our industry and what we expect. And that will allow them to then open that door. We're not going to, Kevin sent out a list of audit firms that had 30 or 40 on it, probably.
Yeah, probably about. And we do maintain a list. So if you have somebody that comes in, we will not recommend any specific firm. What we will send to them is a list of firms that have done DDSN work that have passed our QA process when we review the work. And yes, it's probably 25 to 30 firms.
Okay, got it. Just wanted to make sure there was availability. Thank you.
Are there any other questions, Barry?
Yeah, I have one that's important, that's very important to me, and that is that I realize that, and by the way, I looked over Chris's document. I think it looks very good to the extent that I can. I'm not an accountant, but to the extent that I could figure it out, it was well done. The only thing I would ask is, can we consider forcing rotation of these auditors? Because in the county I was on for 25 years, we had the same auditor over and over and over again, and we voted several times, and we got voted down to change auditors. And the purpose, I think, of an auditor is to get fresh eyes onto a situation. And that's why it was very, very hard for me that we never could change auditors for years and years and years. I haven't been on it in 4 years, so I don't know what they do now. But I do know a prime example of the reason that you want auditors to change on a routine basis is what happened with, I don't know how many, none of y'all are, I'm sure, not quarter horse people like I am, but you are audit people, and this went through the audit world as far as I understand. There was a woman named Rita Cromwell from Illinois who stole $53 million from a town in Illinois over 25 years. And one of the things they attributed that to was they used the same audit firm over and over and over and over again. And that is just something that I would strongly recommend that we force people to do, is to change auditors from time to time. I know it says we strongly recommend it, and I think that's good, but it's much better to say they must change at least every few years or something.
I'm going to let Kevin address that, Barry, because this is not something we haven't talked about. Go ahead, Kevin.
Right. As a matter of fact, and what has been happening is this directive has transitioned into DDS and finance from internal audit. Chris's staff and my staff have been meeting to work out what we want to do with this. And we have several changes. Auditor rotation is one of those that we have discussed. And I think when we started this, we said, here's our master list. There's no way we can work this into the working draft, or people are going to show up with pitchforks and torches. And so we were saying we were going to do phase 1, phase 2, phase 3. Phase 1, because as Chris mentioned, we're really trying to push a lot of the work that was done by internal audit in terms of consumer funds and property reviews. We're trying to push it to the external auditors to free us up to start looking internally at DDSN operations. So this is, phase 1 is very heavily involved in getting them more tuned to some of the extra work and the ROAP and the mandatory training that Chris referenced. So, you know, they're going to have to bring their auditors in here for some training. So I'm not saying that that was, again, it was discussed over and over. It just didn't make phase 1. I could certainly see it going into phase 2. I do think we probably need to do a little research on it in terms of implications of it. What would be, when we put this out for cost, what I'm afraid we may hear is, put this out for comment, we may hear some cost concerns, and maybe not. I think if you make that change and you have to get bids, some of those auditors that are bidding, because if they, you have to give it to somebody new, then those bids are going to come in, they're going to be a little bit higher because that audit firm is going to be new. So they're going to have a learning curve the first couple years. So I think it's a great idea. I'm just thinking we might want to consider this for phase 2, which would be next year.
How long is phase 2? How many years does phase 2 take effect?
Next year.
Next year. We issue this audit directive every year. That's what I was about to say. This is annually reviewed.
So Kevin,
well, I wouldn't have a problem with making it another year, and I wouldn't have a problem with making it every few years that they had to change. But I just think that I can't imagine, and Chris could help me with this better because he is more of an accountant, obviously, than I'll ever be and ever want to be. But personally, I cannot see a reason that somebody would say, I never want to change auditors, because any reason they would give you to me would be another reason you want to do it.
You're exactly
because
right.
If it's because you feel comfortable with the auditor, then that's the exact opposite reason I'd want somebody to audit my books, because audit is not balancing your books. Audit is auditing to see if there's any problem.
I agree wholeheartedly, and Barry, what we landed on when we met as a team, we had several internal audit staff and mine as well. We were thinking around 15 years, just so you can start thinking about it. And I'll send you some studies. There's been some independent studies on mandatory auditor rotation, because actually the PCAOB is considered forcing that for SEC filers. And they backed off because after these studies, they realized it would do more harm than good. So I will share those studies with you. I'll be glad to talk with anyone one-on-one about it, but I am very supportive of it overall. And I think, 10 or 15 years max is something we ought to be thinking about as far as before you're required to change. If you change every 5 years, that's going to impact audit quality too, because it takes you 2 or 3 years to become effective as an auditor, because everything's brand new and you're just, and that's a fact. I mean, every time I've taken on a new audit, I feel like the first 2 years I barely even know what I'm looking at, and I'm just crossing my fingers hoping, that nothing slipped through. And then by 3 or 4, I finally get what I'm looking at and understand everything. But I think you're
thought
spot
all these people
on.
that did them were experienced at them, so I thought that wouldn't be a big problem, but maybe so.
There's a lot of nuances to every entity. If you audit the Babcock Center versus Jasper, I mean, that's totally different. They got their own retirement plan. They've got HUD houses galore. They've got separate subsidiary companies. So yeah, it's not apples and apples all the time.
Okay. Well, maybe we could at least consider it for phase 2.
Oh, I think
Definitely.
absolutely.
I just think we got to land on what's the sweet spot as far as what the mandate's going to be. Somebody's driving.
Yeah, me. Robin.
About how many years?
Well,
Well, we can negotiate on how many years. It just needs to be done at some point, because I don't know of a time that the county that I was on ever changed.
Understood. Well, I know
And I was
Florence,
on there for 25 years.
when I was at Florence, we had our 25-year anniversary when I was there, and that was back in 2000. And we had the same firm since the day they opened, and they still had the same firm. So you're spot on. They've been there 40 plus years.
Right. It's definitely
Okay.
a good idea. You were talking about the lady in Illinois. I mean, we've had that in our system. It was years ago, but we had a finance director who had online access, and so she was cutting herself checks. But she wouldn't cut herself any kind of checks over and above her pay in February or September. And the reason she didn't do it those 2 months is same audit firm had been in there for years, and those were the months they pulled the sample payroll. And she knew that.
Classic example.
Could at least change
Do you-
up months.
I have
Yeah,
a
really.
question. Do the boards have to get 3 bids every year? They just at least have to do that every year or maybe
No,
every 5 years? Okay.
There's a procurement exemption for external audit services that's built into the state code as well as ours. What Kevin has always put in the directive, and it's still in there, is that we highly recommend that they be bid. We could amend the procurement directive, because I got to work on that still anyways. The only changes y'all approved were related to the state law changes. It wasn't to any other things we might want to do there. So that is something, that is our directive. We can take that out of there if we want. We don't have to have, what the state law is are the minimums. And so if we want to go over and above that and require things that they don't require, we can do that all day long.
I will say, I do think several of the providers do it. It's a multi-year. I don't know how y'all do it.
Do a
It's like 5
multi-year
years.
contract.
It's a multi-year contract, like year 1, year 2, year 3.
Okay.
And they'll rebid it at the end of that term.
But some don't bid it at all.
Right.
I mean, I had some clients, they were like, look, we don't want to lose you all. We know we're going to hire you. Can you just keep going for another 5 years?
Right. And then some may rebid it every 5 years, but it doesn't mean that the auditor changes. It just
Correct.
means that they're getting new prices.
Could we at least say we recommend they do that?
It's in there.
It's already in there.
I copied and pasted into the email to you earlier, Barry, plus it's under the contracts heading, if you look at the directive. That
I
we
know the
sent.
part about rotating auditors is in there that way, but I didn't even know if that was.
Well, it wasn't rotating auditors. It was just getting
No,
bids.
it's in there.
Bidding for the service.
We also recommend.
Recommend
No,
rotating
I
audit.
thought it was rotating auditors was recommended.
Yeah, it's in,
Not the
that's in there
firm,
too.
The firm, but the team.
But the team of the
It's
firm.
actually in there. Yeah, under contracts, if I can find it, it states, While DSM boards are not required to obtain bids for audit services, DDSM believes that obtaining such bids is a good practice. DDSM therefore encourages DSM boards to obtain bids for audit services. Then I added, additionally, in-charge auditor rotation as well as audit engagement team member rotation is highly recommended.
Okay, all right. Yeah, well, it was both in the same thing. Okay, I'm sorry.
Okay. Thanks for clarity on that. Any other questions before we determine what to do with this? Okay. So, is does my motion need to be that we just move forward with making the document available for public comment before we carry over into the commission meeting?
Yep.
Is that what the very next step is now?
What the next step
or
is now. Yeah, that's the next step.
Yeah. Okay. So can I get a motion to do that? Carry it to after public comment. Carry it to the commission meeting.
So moved.
So moved.
Okay, let's back up step. Hold on.
Okay.
Public comment now. Back to the finance committee meeting with the comments and the answers to those comments, right? And then to the commission meeting.
Yeah, I think probably we can. I think we can limit the motion today to set up
Just
for public comment.
Public comment. That's all you need to do. Yep.
Okay. All right. So I am making a new motion for the audit directive revisions and enhancements to be made available for public comment. Can I get call for a vote on that?
Second. If you're doing the
Great.
motion, then I'm seconding. But I thought. Anyway.
Okay. Sorry. I know. Can I get a vote on what we just said, or what
Aye.
I just said? Okay. And then Gary, you're going to second it.
Barry
Okay.
seconded. I am voting in
Okay.
favor.
Okay, great. So that makes we'll carry it forward and is I guess what approved. All right. So the next item on our agenda is discussion of 60 state-owned properties. Will staff, Chris, or whoever wants to take the lead on this topic and sharing background?
That'll be me. I just wanted to bring up a comment Kevin and I were talking about. Sorry if y'all got that feedback. I know these things are sensitive. We also have 27506 DD, which is our audit directive related to QPLs. It pretty much mirrors this one. There are a few differences in them, but what I would like to do is they're not substantially different at all. So basically what we have to do is just a drafting process now to pull that one up and make the same changes in it. Are you fine with releasing that one for comment as well, or would you like to bring that one back through the March meeting so you can actually see those changes, or send you a draft of it by email later? I did not have time to do both. I do recognize there are two, but I thought they were basically identical, but there are a few little nuances.
But the 06 mainly is for private providers that don't provide residential services like our EIs and private case managers. And it really requires that they do that agreed upon procedures. So what you're seeing in Chris's document here is pretty much going to be the same thing in that directive.
Okay, and which document again are you referring to? That feedback.
Well, there was, I don't know,
Was it a-
sent it, the very last one, it was an example of attachment B, which was the independent accountant's report on applying agreed upon procedures. There will be a few different things in here though, because like room and board, they're not going to have anyways, let me get it done and send it to you. That's probably the easiest thing to do. And let's put
All
it
right.
on the March agenda.
Okay. All right.
Right? Year ends.
It's, some of them are state fiscal, some of them are federal fiscal, some of them are calendar year. Like, I think Mentor runs a federal. Like Care,
And Chris,
they run a calendar year.
Yes, ma'am.
so we were on item 5, right? The 60 state-owned properties.
Yeah, I just want to let y'all know about the QPL, or the Private Providers Audit Directive. And if you guys are okay with that, I can go ahead and do that now and have it for the March meeting, so that you're not sitting here being asked to do something you haven't seen.
Okay.
That works for me.
Okay.
All right, so then
So,
item 5 then. So for those of y'all that have been around, you're probably familiar with the oversight stuff we went through with, was it the House and the Senate both, I
House
guess?
and the Senate.
So part of their recommendations when they went through that process was for us to get out of the real estate business with our with our DSN boards. And so I sent you a list. There's 60 properties at this point. It used to be 65. 5 have been sold or closed down, and are in our inventory. These 60 properties, we need to identify a path forward on transitioning these to our local providers. And really all I wanted to do is bring y'all up to speed so that you knew we were working on this. We have no suggestions, no answers, no recommendations at this point. What I do want you to know, we did put in a budget ask of $487.5. It looks like it's going to be approved, and if we get that, those funds were asked for in regards to these 60 properties. Most of these properties, if you look at the schedule I sent you, they're residential. There's, I think, maybe 5 or 6 that are administrative or day facilities. So most of them are houses with folks living in them, and a lot of them are really old. And so we've got some deferred maintenance issues that are out there because, again, I don't know if you're familiar with our directives on this area, but these state-owned facilities, it's kind of weird. We pay for certain repairs and maintenance, all the insurance, the licenses, the inspections, a whole host of expenses we're on the hook for as a state. And what's odd about it, well, I don't want to go there yet. I'll circle back around to that comment. So anyways, last year we spent $220,000. I ran numbers for last fiscal year, 2019. We spent $220,000 maintaining these facilities, including the insurance and licenses. So this is a really, really big cost to DDSN. The issue you have is when you look at our band payment system, we don't have a different band payment for folks that have a home that we own versus a home that they own. So we may be giving a board $80,000 per consumer to live in a home that they own and maintain. We're giving $80,000 per consumer to these folks, and we're paying for all these expenses for repairs and maintenance. So it's a real uneven playing field. And so the reason we got to get out of this is because as we go fee for service, we need to be in a fair, balanced, equitable system. And so transitioning these to those providers will then allow, everybody to be on the same playing field. And so we are trying to meet with providers and establish a path forward on this. Like I said, I don't really have a solution at this point. I know Pat and Rufus, Mary and I have all been meeting to discuss this, and we're going to try and get a meeting set up with the providers here soon to start opening discussions. And so I just wanted to bring this up, let you guys ask questions, let Pat comment it because he's got a longer history with this than I do. But that was the purpose, so that we didn't just spring something on you when we actually had an actual plan in place or a recommendation. Do you have any questions? commissioners, or Pat, do you want to comment?
I think you covered it. It's really just a legacy program that represents about 10% of the residential beds in the community. So 90% have additional costs that these 10% don't have, and we're just trying to level the playing field and be responsive to the General Assembly in being a little bit more arm's length with the provider network and move to the fee-for-service model.
And we've met with the state folks, and they know as far as transitioning and deeding these things over, we've already got the Department of Administration agreeing and understanding this whole process. So really all we got to do is flip the switch when we're ready to flip the switch. So we've got everything tackled logistically. It's just a matter of, are we going to give funding with the deed to say, hey, here's some funding before deferred maintenance issues.
I think the sooner the better that we get this done, the better. It's obviously crazy that they would get all the benefit from it, and we pay these fees. The biggest thing I would say is that if we don't need to do that, that's great. But we could also do what's called a triple net lease, where temporarily, until we could get it transferred into their name, that they would lease it from us and they pay everything. If we had to do that, but if not, that's great. We just need to get it done as quickly as we can, because it's obviously ridiculous that we would pay all this for absolutely nothing. I mean, it's just another one of those things that if a business was looking at this, they would say, "What are you doing, man?" I mean, it doesn't make any sense. Why would you pay people's fees and you're giving them an asset too? Y'all, we do need to probably give them some money for deferred maintenance, but you got to remember too, you're giving them an asset. So, I mean, that's worth something too. It's not all, unbenefit to them. They get an asset for it.
Sure.
And letting you know too, there's going to be a reversionary clause, and when we gift this over or donate it to them, that says basically if they discontinue using the facility for its intended purpose, that it reverts back to us. And if they dispose of it, we have access to all the proceeds, because we got to pay the state back 50% of anything it's sold for. So yes, they're going to have the asset. They'll have free and clear use of it. If they ever discontinue it though, we've still got our connections to make sure that they, one of the fears or one of the thoughts is, well, okay, so we donate this to them, then they just run out and, close things and start selling properties. Well, we're not going to permit that.
Right. We also have QPLs raising the issue, why can't they get this property too? So that's something we might want to be thinking about as we address it, to whether or not that is, I don't think that the state is a private company versus a quasi-governmental entity. The two things are treated differently. So we might want to get some clarification from the state on that, just so we can answer the question, and it's not because I told you so, I doubt that was raised, so.
And so, one of the things as we move down this path is if the providers don't want to take these homes, that's where we're going to have to figure out what our responses will be. One of Mary's suggestion, what you just made, is, well, then we're going to enter into a lease agreement and you're going to pay us rent, because we've got to level this out. This has got to be fair. The other option is, well, if you want to close it and get a new home, we'll be glad to work with you, not funding that though, to make that transition if you want to get a different house. I mean, we already do that with providers. They would have to go through the same process they do now. If they're like, well, this house is like 60 years old in a really bad neighborhood, we'd rather, get our folks in a safer location and a nicer home, then we can work with them on that as well.
Yeah, then we just keep the asset until we sell it, right?
Yeah, and we can do that too, and as long as we give back some of the asset to the state. They're not all that easy to sell, but it depends on the facility itself.
So I don't want to
easy
hit
to sell, but I mean, they still can be sold.
It happens. We can do it.
So I'm trying not to hit you flat-footed with this. So we are going to start these meetings with the providers. I'd be interested in getting any feedback from y'all if there's concerns or guidance you want to give us as we go forth and start meeting with providers on this.
Chris, is there a hard deadline for us to make the transfers or, okay.
No, one of the providers had brought up, since you're getting an appropriation, you have to spend it within the year. No, it's like if we get an appropriation for this, it goes into a separate account, and that's all it can be used for. But we can negotiate. This is not, there's no hard, fast deadline on this. This has been going on for 30 years.
Okay.
One of the many things that's time to stop.
Yeah, and
Right.
in line with what Barry said, I mean, these sort of situations have been an ongoing toothache for us because there's always the claims of favoritism of why did this person get this and why are we paying for this person's roof and doling out special consideration to this group or that group that I'm not getting. So the further away from that side of things that we get, the happier I will be.
Yeah.
That was
All
all I
right.
had.
Okay. I don't need to make a motion on anything for this, right? You're just going to go to the next item. This was just an informational.
Correct.
Mm-hmm.
Yeah. Okay. All right. So I know the sixth item is discussion about day program and rate setting exercise.
Okay.
Chris, or,
So you know, our challenge is to get out of this band system and move fee for service. And what we've got to do is start prioritizing what pieces go first. And we feel like day programs the most natural step to take next. So we have begun meeting with providers. We had a meeting yesterday with them to initiate a rate review and a rate setting exercise with them. So what we're going to do is collaborate with the provider network to help establish what a healthy rate is to then approach HHS, assuming the rate's higher than what we currently get, which it may not be. We would approach HHS and try to negotiate the rate that the provider network, along with our agreement, feel is needed to move to a fee-for-service world for that service. And so I just wanted to let you know that we are working on that. We probably have a 3 or 4 month time frame. We're not looking at implementing this July 1. It's going to take us several months to gather all the data and generate some agreement amongst all the stakeholders.
And one of the reasons we did go after this rate is because in that Mercer report, the day program rate was obviously in error, since the assumptions were so poorly done. I think that this one really is the one that scared the providers because the rate was a third of what they're getting now. And like going, no, we got to explain this better. So in the course of coming up with a rate, you're doing all that explanation as far as what are accountability levels, where they have to be. And I think that while we're doing this, we're also looking at a difficulty of care rate so that we can actually support people. We can, Robin, it sounds like you're diving, like you're going under the water.
I wish.
Are you on the road? I'm worried.
I wish I was in the Caribbean. Yeah. I'll put it on mute. I'll put it on mute.
So that is one of the reasons why we're hitting the day rate. And I'll be honest with you, and Gary, we've had this discussion, and you just hit upon it. When you're trying to it's not about just shoring things up. It's about it's more like a demo and a redo. And when you demo something, you find other things in the walls. And what we're finding is we might need to look at our day program descriptions of services, that they're very confusing and they overlap so much that we might want to get more succinct about what we call day programs. So this exercise is really more than just financially setting a rate. It is opening the door for other repairs that are required. And that's what we're doing now, because we're going to have to be looking at those waiver documents and submitting other services or combining services, or basically just redefining the services in a much more succinct manner that people understand them. I think families should be able to read a waiver document, and it shouldn't be written in Governese. It should be written in English for them. And access to those services should be just as easy. So,
and one of the comments brought up by one of our providers, and Robin, you'll want to hear this, because the question was asked, well, what about different populations? There's a big concern with the autism folks that are coming out of high school, and whether our day programs are positioned to serve those folks. They have unique needs, and there might be unique facility needs even, because I know that lighting and things, sensory and things of that nature. And so we've got to contemplate that as well as we do this, because currently we don't have any kind of distinction there.
Interesting. Yeah.
okay. Some of this, we're just letting you guys know about this stuff too.
Yeah.
So it's not the first time you hear it when you got to vote on it.
Yeah. Okay. Any questions before we move to the next item? Chief
None for me.
Financial Officer report. Okay. Barry?
I don't have any questions.
Okay, great. All right. So, Chief Financial Officer report. Who's going to take? What staff member is going to take that?
We're
Item.
going to add these two items as standard agenda topics, where kind of like Mary gives the state director's report, we can bring to you anything that you might want to be aware of that's going on since the last agenda, since this meeting, and just general updates as things going on in finance. And then Kevin's got his report as well. Basically, the only thing I wanted to go over with you guys is let you know we're very, very close to the 2017 cost report. We should be getting that this week or early next week. I'm thinking this week. They're supposed to get me full printed version ready to file. We've done a very extensive set of reviews and feedback with the CPA firm out of Maryland. So we're really hoping to have that done really, really soon. I know you've heard that it's coming in the past, but I think this one's legit. We're right there. We're also trying to build, and then I guess let me say this, they're then going to go back and do 13, 14, and 15, and Health and Human Services, paying them to complete those. We need to get on 18 and 19, though, because, let's say it takes them 12 months to finish those 3 years. We're at 2020 stacked up now at that point. So we've got to really start building our ability to do these internally and make sure we fully understand Medicaid cost reporting and allowable costs. So we're moving towards a model where we're going to start on our own cost reports for 18, and that's in the works. We will hopefully get that going towards the latter part of this month, early next month. We've got some staff restructuring to do, to make that happen. The other thing I want to let you know is we're really, really focused on financial training. We've done a really good job here, in my opinion, since I've been here, trying to really elevate our communication to finance folks. Some of the exciting things we've got going on, just to let you know, we used to do like one-off trainings with new finance people. They would call up here and say, hey, I'm new, can I come up there and meet with y'all and y'all train us? And I told folks in my department, like, we're not doing that anymore. We're going to do it in a structured manner and invite everybody in the state so that we get more bang for the buck. So we've structured standing quarterly finance trainings. Agenda's identical every single time. We've got 22 people signed up for this one. February 27th, we've had 40 or 50 at the other ones we've done. So it's really, really been well received and well attended. We've got that going every quarter. It's a 4-hour training, actually a 3-hour training. Kevin comes in and talks about internal audit. Procurement comes in and talks. IT security talks. We've got a whole group of us. We also have a lady that's external to the organization that's going to come in, and we're going to begin let me drop back a little bit. So the finance directors, I told you, they aren't as up to speed as they need to be on the accounting rules. We need to invest in our finance directors, and one approach would be for us to do all the training for that. But honestly, that's not my foray. That we need to bring in some experts, and so I've identified a lady that does a lot of continuing ed for the CPA folks, and she's going to begin an annual training for us where she writes a customized training program. We're meeting April 1st. Y'all are free to come to that if you want. I don't, you might want to participate just to see what it's about. But April 1st from 9 to 4:30, she's going to come in with a training. We're probably going to have over 100 people, I would assume, at that. We're inviting auditors as well. So we're excited about that. And again, we plan on making that an annual thing. We've also developed, I haven't released it yet because it's not finalized, but we did a survey of all finance directors, actually multiple surveys, to identify areas of need, and we've identified a host of different topics, and we've scheduled them throughout the year from starting in April through the end of December, and we're going to develop training for cost reports, cost allocations, room and board, direct billing. Just going to give you some enterprise risk management, insurance reserve fund and workers' comp, fixed assets, capital asset, depreciation, things of that nature. And so I just want to let you know that's going on, and that you have a feel for kind of what we're trying to do to help our provider world. And that really is all I had.
Chris, I really appreciate all the work you're doing and these new programs that you just outlined and training opportunities. I really appreciate that. And I am curious, what's the main difference between the meeting on February 27th and the meeting on April 1st?
So the February 27th one, every 3 months, we have standard new person training, if you will. It's like an orientation for people that are new folks in the system. We may have residential directors, HR directors, day program directors, EDs, finance directors, all kinds of folks, maintenance people. It's really an orientation. The April 1st training is an in-depth accounting standards and audit standards, very, very technical training just for auditors and finance directors. These are related to, for example, there's a brand new standard that's effective this year on leases, and nobody knows anything about it. And so we're kind of stepping out and saying, look, we've got to take this on and do a better job of trying to educate our providers because they don't really know how to access these resources.
Got it. I would be interested in attending both of those. My schedule will allow. So.
Great. That'd be awesome.
Okay. Yeah, definitely send me an invite to those two. All right. Anybody have any questions for Chris before we move to the next report?
I just wanted to say that the best news I've heard all day is I meant to say this a second ago. Sorry, I'm bringing it back up, but one more just to say real quick is the best news I've heard all day is that we're trying to figure out what we're going to do about the state program rate to make this fee for service. That is like music to those of us who want to see fee for service everywhere to our ears.
Right.
Well, if it's going to be fee for service, it's got to be the right rate. So we can't underpay them for something, and we got to make sure we get some sort of difficulty of care rate in there for the folks that are hard to take care of. So we got to work on that. But that's insurmountable. It can be done. Right, Chris? Oh, I didn't say that part. All right.
So the last item, the internal audit report.
All right, what I have is just for information only. It's just in order to give you an update of what we're doing, some of the projects. So today we started at Charleston DSN Board. This was a request and this really isn't an audit as much as we call a technical assistance visit. Their finance director resigned, so the board chair and the ED asked us to come in and just do a review of their financial processes, make sure that they're operating okay. So we agreed to do that. We started that today. We've also started doing some preliminary work for I have a hard time remembering this, but it's now called specialized family homes. This was asked by DSN Executive Management, Chris and his team. Most of these homes transition to us from therapeutic foster care homes at DSS, where a child ages out, and we convert it to a specialized family home. So we're looking at that and the processes that they have in terms of in the solicitation, there's some availability for them to have add-ons for behavior supports and day services. And so we're looking at that. We might be leaving some money on the table. We're paying stuff with state dollars that we might be able to be paying with waiver dollars. So we'll be looking at that. Also recently, last week, we had our exit conference with IT here, where we did an audit of their tracking of their assets, desktops, laptops, printers, servers, etc. We had an exit with them. We just this week we had an exit with Lee County, where we did an audit of their fiscal operations for their day program, for their contracted services, and they definitely have some weaknesses there. Barry, just for your information, Robin and Gary know this, so we've given them 30 days to respond, and then we will be issuing their audit report. Once we issue an audit report, all commissioners will get a copy of that. So you will be getting a copy of those two reports probably in the next 5 to 6 weeks after we get their corrective action plan. Trainings. Last week we were in Anderson doing consumer funds and property training. We're doing that same training at Burton Center on the 18th of this month. And then on the 25th of this month, we have a board of director training that we do, and we're doing that for Darlington County on the 25th of this month. Legal cases. I went up a couple weeks ago and met with the solicitor. We had an audit at Cherokee County where we had an EI supervisor who was allowed to start her own private business, and she was using her procurement card with the local board to buy supplies for her private business. It also looks like she was possibly stealing time. She was using an agency-owned vehicle in her personal business. We turned that over to the sheriff's office actually a little over 2.5 years ago. Well, it finally made it around to getting on the solicitor's docket. Went up there and met with him. I think initially he was sort of going to just do a plea on this, but after looking at the evidence that we presented, this is going to trial, he thinks, in April. So we have that. As I mentioned, I was in Anderson County doing some training last week, and I don't know if y'all remember. This is going back years ago. Anderson County had their SLP1 had debit cards, 21 individuals. They were all exploited. The debit cards were stolen and used, and it was about $28,000 in a number of municipalities up there: Anderson County, the town, Townville, Williamsburg. So we went in at that time and sort of assisted them with that, but the perpetrator had not been caught. Well, when I was up there doing training, they said they finally caught her, and she is serving time in Anderson County, and these other little municipalities are waiting for her release because then they plan on pursuing charges against her. So that was good to hear. In terms of external audit reports, as Chris was talking about that directive that we are transitioning to finance, but we had it for FY19. Those are due. We still have some that'll be due because, again, we allow the provider to have whatever fiscal year they want to have. You know, our boards run a state fiscal year. A lot of our privates do just because that's the way we're set up. But we have some larger entities that follow like a federal fiscal year or a calendar year. So what I'm reporting on now, because those that have a calendar year have till the end of March to get their ROAPs to us, and if they owe us any audit reports, to get those. So this is just reporting on those that would have been due to us for the state fiscal year. We had a number of boards that we received the audit report late. The policy allows for a $100 a day contract reduction on that. we will be imposing that. It looks on like maybe about 9 providers. The total right now is roughly about $9,700 total for all those providers. We still, like, we had one that we just got last week, and we still have one that we haven't received yet. But so we are working on those and to get that last one in, but just want to let you know that we will be having some contract reductions in that area. And other than that, that's all I have, unless y'all have any questions.
No, I don't have.
I just had one quick question. The board training you're doing for whichever county you said it was,
Yes, sir.
does that include the Freedom of Information Act
It does.
in there?
Yes, sir. It does.
Like 34-4-90, where they talk about how they can vote by individual member, and anytime somebody asks.
How they can, I'm sorry, that last part you broke up.
I'm saying where it says 34-4-90, where it talks about if somebody asks for there to be a vote by individual member, people can do that. If anybody on the board asks for it.
I don't know if we have that specific statute. We do discuss FOIA. That's something that we can add in there. But we do discuss FOIA.
I would strongly recommend we add, look at what it says under 34-4-90. That is the most important part to me of the Freedom of Information Act, other than the obvious thing about if you're in the executive session. But other than that, 34-4-90 is the most important thing for boards to know, that they can require people to say they can vote by individual member, whether the rest of the board wants them to or not, for one thing. And for another thing, anytime that there's anything in the minutes that a board member won't inserted, it can be inserted. And people need to know that. I think a lot of boards don't know that.
All right. We certainly can add that.
It's 34-4-90, but that really needs to be in any training that we do for a board.
Right. I've got it. We'll go back and we'll add that.
Thanks a lot.
Yes, sir.
And
That's it.
yeah, you send that to me in terms of what that particular, either Kevin or Barry, the actual thing that you're referencing, that what you want in
I'm
there.
almost sure it's 34-4-90. I'd be very surprised if I was wrong, but I'll certainly send it to you. Yeah.
Okay, yeah, I'd just love to see it and get more
Very
familiar with it. Yeah. Okay.
All right. Any
Do
other
you
questions?
have anything?
Nothing else for me.
I'm good. Yep. We're good. All right. Are there any other matters that we want to bring up before we adjourn?
No, that was it.
Okay. All right.
Okay, Mark, our next.
Yeah. Next meeting is March the 4th.
Yes. At what time did we say? 4? 3? Can't remember.
3:30, 4, it doesn't matter.
It was 4, wasn't it?
I think it was. We
It
did
says 4 right now.
Yeah. Okay. That's it.
On my calendar, it's at 4.
Okay. Great. I don't have that right in front of me right this second. All right. Well, I guess we'll adjourn and conclude our meeting.
Thanks very much.
Thank you.
All right. Thanks, everybody.
Thank you.
Appreciate it. Okay.
Bye.
See you soon. Bye.